Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. I've left my lines on the chart from last week so you can see how the forecast panned out. And I would encourage you to take some notes on this one because I'm going to talk a little bit more about the CCI and what that means as a leading indicator, especially when we're trying to determine what the momentum of the market is. This one-year chart, you can see that since the beginning of the year, the Dow has gone through a very strong rally. This is called an up leg right here. And as I zoom in, you'll see that my forecast lines last week, right there, I suggested that early in the week we would rally, and then later in the week we would sell off, with the end of that line right there being my target. We almost hit that within pennies right there on Wednesday. And then after this target area was reached, we saw a bounce in the market today as I record this on March 1st. Now, what does that mean for next week? Well, again, let's take a look at the CCI. Down here, you can see that I drew this line more or less as a resistance to the CCI, showing that we are not really showing higher highs on that indicator, while at the same time the price action is showing higher highs. So this is still considered to be lack of momentum and displaying a weakness in the market. So as long as we stay below that line right there, and you can see here's a high on the CCI just as we were hitting the high on Monday, and we are just not getting higher highs on the CCI. So for next week, I think that we're going to stay within the range. I'm going to erase all these right here and redraw this for you so we could get a clean slate and not confuse what we're talking about. Again, I'm going to draw a resistance line from this high right there. That is still holding resistance. The low that I am drawing right now is the low from back here in early February. So that is more or less a trading channel that I'm drawing. So I think we're going to stay within this trading channel until we start seeing the CCI drop, giving us a sell signal. Once this continues to drop and stays below the 100 level, then the momentum is now shifting to the downside. I think early on we might see a rally next week, and then we'll possibly pull back again just like that. So it's more or less a mirror image of what we saw this week. Now for the spiders, that's the ETF for the S&P 500 index. You can see that, again, my lines were drawn last week. Monday, we went right up right here, touched that resistance line, and then started pulling back, just as I suggested. Now, the interesting thing about the S&P is that this is a doji that's forming right there. So while I'll erase this line, I will keep the channel lines in place here because that doji is a sign of indecision, and we generally see that at pivot points. If you scroll back and look over the course of time, you see here's a doji found right at the exact pivot point right there. Here's a doji where that was also a pivot point. Stock moved up, doji formed, and then it pulled back. You could see, again, here is a doji right before the market turned lower. And it just goes on and on. Dojis and spinning tops are fairly reliable. We can count on them. I wouldn't call them leading indicators, but they're definitely a sign that's telling us there's a shift in the momentum going on the price action. So for the S&P, I think the S&P is going to drop back down just like that. And you can see that that doji is also supported by higher red volume right there. So we had more selling pressure at that resistance high than we had buying pressure. That's for the S&P. Now the VIX, it's very interesting because the VIX moved right along my forecast line early in the week. and we didn't get down to this level. However, the VIX is showing oversold now on the CCI. So as soon as the CCI starts crossing over this minus 100 level right here, that will generate a buy signal for the VIX. Now remember, they're inversely related. So if the VIX starts moving higher, we're expecting the general market to move lower. So I'm going to erase all these lines right here. All right, and I'm going to keep this level of support down here because this is ultimately the support level from the 3-year lows. And I'm going to make a forecast just like that the VIX will start moving higher. I think I erased that CCI, so let me put that right back. I think the CCI is going to start moving higher and the VIX will move higher, which means the S&P will start moving lower. Now, if we look at the Qs, NASDAQ market, these markets don't always go in sync. Again, interestingly enough, as I zoom in, we hit this resistance area. We're kind of floundering around with that. And both the stochastics and the CCI are in overbought territory. So if I erase all these lines, my forecast for next week is that we will start pulling back in the Qs as well. I think that resistance line is really strong enough to hold the market down. And so this is really going to be the new resistance right here from the highs back in November. So I'll leave that just like that. Yeah, we might just go a little bit higher on Monday, but I think ultimately we're going to start to pull back just like that. So that's the forecast for the Qs. Finally, Russell 2000, more broad-based index. I think we're going to see the same exact thing happen in the Russell as the rest of the markets. This resistance line is going to hold. We have already broken this fan line, which brought us to this fan line, which that too was broken. So even though that's a green candle, I think we are going to bump our heads against resistance again right here. And then like the S&P and the Qs and the diamonds, we'll start pulling back just like that. Next support level really is going to be right around those lows from back in early February. So that is the forecast as we see it throughout the markets. If you're interested in learning more about our mentoring program, I only have one more spot left. So just go to themarketguys.com, click on the contact link right there. Send me an email if you're interested. The only thing that I require is that you have at least $100,000 in your trading account to make it worth your time. I am the only person, as far as I know, in the world that offers a written guarantee on the performance over that 2-month mentoring program. So just reach out to me. We can get on the phone. We could talk about it. I'd like to learn a little bit more about what your trading history is all about and your success rate. And I am absolutely certain we can improve on that. So that's it for now. Have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.